All right. Hello, everyone. Good afternoon, good evening, good morning for some. How's everyone doing? Can everyone hear me? Can everyone see me? Hello. Check. Hello, Isaac. Hello, Sjoerd. Hello, San. Hello, SVY. Some familiar names. Love to see it. Hello, Ryan. How are you doing? All right. Perfect. Thank you. I'm doing good. Thank you. How are you? Thank you. Hello, Emma. Hello, AJ. Hello. Hello, David. All right. It's been a while. Yeah, I understand. SVY, I understand. It's been a while. Okay. If you're not aware, again, the schedule for today. So we are going to be live. We are going to be live on Friday. That is Friday, 2 p.m. New York local time. And also on Sunday, 2 p.m. New York local time. If you have any questions for me, we're going to dive into that in a little bit as well. Then you can go to the first link in the description, and that's where you'll see where you can ask a question. If you also go to that link, you can also see that you can like other questions. So if you think, hey, there is a good question right there, I want that question to be answered, I'm very interested to hear the answer to that question, then you can like it. You can like it, and we'll go over the most popular questions. Then once my brain gives up, essentially, that's when we'll stop, if that makes sense. Because we have 74 questions at this moment in time. Will we likely go over all 74? No, most likely not. So if you have questions that you really want answered, then give them a thumbs up, if that makes sense. All right. Thank you. I also saw a late birthday wish. Thank you very much. Thank you very much. Thank you. I appreciate it. Hello, Roy from South Africa. Love to see it. All right. Okay, first thing we're going to do before we dive into the questions is we are going to be diving into the market. A little bit what we saw, a little bit in context as well of the videos that we have been, well, one recent video, and that's the video from yesterday, the all-time high protocol. I already saw some comments. I already saw some people that in the questions section as well, they said it has been playing out nicely. I need you to understand it works over and over again, consistently. NASDAQ, ES, gold, stocks, whatever you're trading, it consistently works. Thank you, HJ. Thank you. So that's also what we're going to dive into a little bit. I also want to dive into the dollar a little bit right here. So in this past week, we saw quite some interesting price action. If we first go over the dollar, then after we'll dive into the indices, etc. Then what we saw in the past week right here on the dollar was that we had quite a clear idea of what the bias was initially. That was to reach this low right there. Now, when you start thinking of this all-time high protocol and you start thinking of these rejection highs, two-candle rejection, etc., I believe a whole world opens up to you, because that's not only relevant to, for example, an all-time high protocol if we talk about ES or NASDAQ. It's also relevant, for example, when we talk about the dollar right here. Because what are we doing at this moment in time with this low? We are respecting it based on two-candle rejection. You can also apply it to, for example, these daily fair value gaps. So that's exactly what we did in MMT. And what you'll see is when we go into the lower time frame from this daily fair value gap, two-candle rejection is failing right here. Then it's moving higher towards the next PDA. Then it's moving higher towards the next PDA afterwards. And what you're doing at this moment in time, you're just trading in between PDAs consistently. That's what you're doing. So that's very interesting to see right here. And if we first go over, well, some of the majors right here, but I mainly want to dive into the indices as well. The majors, to me, the past week wasn't really that interesting. I haven't really been looking at the majors myself. Haven't really been actively looking at it. I've mainly been looking at, for example, a gold right here, which was very interesting. Actually, at this moment in time is also quite interesting. I've been looking at the indices, which have been very interesting for a very long period of time right here. It has been very interesting to trade the indices. So if we, actually, let me put it in context with the Thursday live session. We had a live session yesterday in the MMT. And during the live session, we looked at the price action here on NASDAQ, where you see all the lines right here. That's where we had the live session. And what we talked about in the live session is just, again, all-time high protocol. So just looking for another reason to buy and buy and buy and buy again. So when we take a look at that all-time high protocol, what do we see on NASDAQ on Thursday right here? This was super interesting example. We saw this. Equities open happened right there. We saw a sting back into the fair value area, into a fair value gap, a little bit of a deeper retrace right there, to then follow through. Now, I want you to imagine how many people are sitting there and thinking, okay, this is very interesting to now continue lower. So this is where they go, or might go into the 5-minute time frame. They might go into the 1-minute time frame right here to now start looking at these fair value gaps right there to continue lower from right there. And again, what we mentioned in that all-time high protocol video of yesterday as well, that simply is low probability. And that is very important to understand. Why is it low probability? Is because look at the higher time frame. What has the higher time frame been doing overall? We've just been continuing higher over and over and over again right there. And that's very important to understand. So what are you doing when you are trying to trade these shorts right here? You're essentially just trying to call top in the market. If there's what is essentially the fastest way to lose money in trading is trying to call tops and bottoms in the markets. That's it. That's it. So if you consistently try to call these tops right here, you're going to make it yourself a whole lot more difficult. Instead, in MMT, during the live session, what were we waiting for? Okay, all-time high protocol. We have this, more specifically the fair value area right there. We have this order flow resistance right there. This is the rejection high. If we start running that rejection high, and we, for example, go into the 1-minute time frame right there, and we see very clearly, and I want you to notice this pattern right here. We sting above the rejection high the first time right there. We create a rejection, and then we sting above it again right there. That's what I would like to see. And then we start to running the rejection high. We start to continue higher, and now this path towards the next all-time high is cleared up again. And if you just consistently focus on this consistent all-time high protocol, consistently looking for reasons to buy, you're going to be fine. You'll be fine. For example, on NASDAQ a little bit earlier as well, what we see right here, 1 hour fair value gap right there. So decide to overtake it right there. And again, we have a clear path towards the all-time high. And that consistently happens. So for example, ES right there, that's the same thing right here. Same thing consistently happening. On gold, that's the same thing over and over. And I saw someone mention as well that it just happened on gold today. And this all-time high protocol, I need you to understand, it happens consistently everywhere. Consistently. It's very important to understand. So if we take a look at gold right here and we break it down as well, we see actually today, which is quite interesting right here, we also have this 4-hour fair value gap rejection high right there that we are currently running. And the reason why I mentioned on NASDAQ, notice the pattern. Rejection, the first time we reach above the rejection high. Okay, and then we start to continue higher again. This is that pattern. Now, currently it's a Friday. So Friday is not really my preferred day to trade right here. There's not a whole lot of time left to make any significant moves happen. But let's say this is the Tuesday. This is a trade ID to continue higher. That is absolutely perfect. So that is very interesting in my opinion right here, gold. And that is what I've been doing as well. So for example, the accounts I showed you, the FTMO account, this week I got a payout from an FTMO account as well. And that's just purely the same thing over and over and over again. Notice here, the same thing right there. Notice if we go down the time frame, the same thing right here with these rejection highs right there. It's the same thing over and over and over. Very repeatable, very consistent, very interesting in my opinion. All right. If we dive into A little bit of silver. Silver, you'll see a lot more lines where it comes down to a lot of the same things right here as well. So where we are rejecting from PD race towards the left right there, it's very similar to the all-time high protocol right here. On Sunday, we will have a video about this as well. Where's the price action at? There it is. How far is that? Wow, okay. On Sunday, we'll also have a video about that. Very interesting. Bitcoin, for the people interested in crypto, it's the same thing. Same thing. So what are we looking at on crypto? On Bitcoin, more specifically right here. But what are we looking at? We see we have a weekly fair value gap right there. A weekly bearish value gap. That weekly bearish value gap, of course, we might continue lower from it. We could. So what we're currently seeing is that two candle rejection is still intact. So we heading into next week, we actually have this rejection high right there that we want to see run to then create a clear path towards a new all-time high right there as well. So that's the same thing on crypto. It's the same thing on Bitcoin. It's again, it's consistently the same thing over and over and over. But Bitcoin right here also quite interesting because it's very similar. Very similar. On crude oil, also a little bit JPY pairs is also where it happened a little bit right there. Quite interesting to see. All right. If you do have any questions, feel free to ask me, of course. If you want me to break anything down specifically, let me also see right here if we have any questions. Okay. So at this moment in time, we have 80 questions. Again, I'm not likely to answer all of them throughout this live session right here. So if you do have any question, we'll do the same thing on Sunday. So don't worry if your question is not answered at this moment in time. The playlists, by the way, I see people asking about that. The playlists are slowly getting back. So there are already playlists that are back as well. There are already playlists. Interest rates cut, but why no US dollar sell? It's very interesting. Fundamental trading is not straightforward as interest rates cut, so that means we'll go lower. Maybe long term, yes. But for example, on the dollar, what you'll see is a lot of that is already priced in. So once the announcement happens that the interest rates are being cut and you think then we are going to continue lower, you're already too late. So interest rates being cut right there, people already know about that. Banks, institutions, they already know about that here. So it's already priced in, if that makes sense. It's quite important to understand. So then eventually you'll see this rejection because that's, how do you say that? It's in fundamental trading, you often say you buy the expectations, you sell the outcome, if that makes sense. So you buy the expectation of things, and when it actually happens, that's when you sell it, because then it's already priced in. If that makes sense. Let's see. Let's actually dive into a few questions. We had very good questions. Very good questions right here. Some questions, because I need to manually also approve certain questions, etc. If your question doesn't get approved, it's because you probably ask like either a weird question or it's just a question that's not formulated correct. So if it's just a question without any commas and it's just 1,000 words, for example, I'm sorry, but you're not going to get improved. If you ask me a good question, we'll improve it right here. Okay, let's see. Hello, Aro, love your channel. My question for you is the best trade management for beginners no management? I understand my edge, but always end up killing my trades early out of fear. How to solve this? This is a very good question. I like this one a lot. And I see a lot of people resonate with it because it has 14 likes there as well. So what is very important when you are a beginning trader, like you mentioned, no management probably is going to be your best bet. Now, the first thing that you want to focus on is when you are a beginner and you're just starting to get more comfortable with trading, is not to do anything, like you mentioned, no management, but you want to gather data. So you want to gather data on, is it actually effective for your trading plan to, for example, go break even or not go break even at all? That's one of the first things you'll likely gather data on, is seeing if break even is worth it. What does it mean for break even to be worth it? Well, how do we know if break even is worth it? Is when you start trading. So when you start trading multiple times and you have a large enough sample size, then we can see once you go break even, if your break even is actually a prevented loss or if it's a missed winner. If it's a missed winner and you have more missed winners than prevented losses, it might not be worth it for you to go break even. So that's something to take into account. That is very important to understand. This is a very good question. I hope it makes sense. But no management, essentially, yes, that is correct. Ideally, at the start, you have just no management. Just walking away as much as you can. That's the ideal scenario, because otherwise you're going to do things that you shouldn't be doing. And especially if you don't have data supporting the IDs that you are doing at that moment in time, you shouldn't do it, if that makes sense. Very good question. Let me move my camera a little bit right here as well. I see it's in front of the question right there. Okay, perfect. Hello, Ario. I'm a day trader, and this week I wasn't able to find any setups. Is this normal? I also really like this question. I like this question a lot because there's so many nuances to it, and I think it's just a really good question in general. So what is important to understand is that if there was no setups for you in a certain week, is this normal? Is this normal? Yes, but there's some nuances to it. It's not normal for everyone. Because what I feel like is a lot of traders don't actually know what they are waiting for. So for example, if you trade an all-time high protocol, you know exactly what you're waiting for. So I can clearly tell you if you've missed trades, so if your trading plan is actually performing well, or if you are underperforming, if that makes sense. So if you are the problem or the trading plan is the problem. But a lot of traders, they don't actually know what they're waiting for. So if you don't know what you're waiting for, how can you know if you missed setups or if there weren't any setups? That's very important to understand. So the first thing to ask yourself, is this normal? Yes, if you know exactly what you're waiting for and it just didn't show up that week, that's completely normal. But if you don't know what you were waiting for and you're not too sure what the exact trading plan is, that's the first problem that we need to fix. So then a symptom of that is going to be, hey, I wasn't able to find any setups. You're not going to find setups because you don't know what you're looking for. That's very important, right? So it's the same thing as traders. They're not consistent because they don't know what is consistently expected from them. I need you to understand that very clearly. So when you go to a normal job, right? If you go to any job in the world, likely you get some standard operating procedures or whatever it might be. Someone explains what is expected from you when you come into the office, etc., etc. So you can consistently work on things because you know what is expected from you. In trading, it's very different because no one tells you, you should get involved here. You should do this. You should do that. And even if someone tells you, likely it's not good. Signals or indicators, not good. But so what is important to understand is that you need to see for yourself what is expected from me. What is my trading plan? You need to know what you're looking for. And the way you can define that is, for example, all-time high protocol. For example, using those arguments that we talk about. That's very important. And then we can truly determine if it's normal that you are not finding any setups. It's very important. Great question, though. I really like that one. Okay, let's see. I see some questions coming in as well. Let me approve them. Again, if you have questions that you like and you really want answered, then you can click on the thumbs up right there if you go to this right here, towards the left right here. Okay. If the questions are, again, not answered throughout this live session, then feel free to come back on Sunday. Sunday, 2 p.m. New York local time. That's where we'll dive into the forecast as well. And the questions, etc., etc. All right, let's see. Next question. Hello, Ario. Hello, ASR. I'm confused about entries after two-candle rejection high/low. Okay. If a two-candle rejection forms at an overlapping defense on the daily and last line of defense is the target, the area of opportunity from the two-candle rejection high to the last line of defense, do I drop 1 to 2 timeframes to check two-candle rejection failure to confirm entry or avoid two-candle rejection at two-candle rejection highs and lows? It's a loaded question, but I understand it right there. Oh, there it went. It's a loaded question, but I do understand it. Can I highlight it like this? Yeah, okay. That way we can see it perfectly. A very loaded question. This really depends on what your area of opportunity is. For example, I'm going to use different time frames examples, but it's the same thing, just different time frames, right? So if we go over NASDAQ, for example, we see that we have the 15-minute fair value gap right here. Overlapping defense right there that we have, right? We have the rejection high. Let's see. The rejection high right here. Now, once we have that rejection high right there, again, this area of opportunity is quite small, right? It's not a large area of opportunity. For example, if we go over this one right here. It's a larger area of opportunity right there. There's more to work with, if that makes sense. The same with these areas of opportunities right here to continue higher. There's more price action to work with. So when we see this, I like to go into lower time frames to already understand what we are doing. So for example, even 1 minute 2 candle rejection right there and understanding what we are doing if we are running the 2 candle rejection high. Now, this is where it gets very tricky. The reason why it gets very tricky is because you can get lost in these time frames. So my advice would be is at first, even if you might miss a few trades, try to stick to the same time frame as the PD rate. So the overlapping defense right here is the 15 minute fair value area right there. Try sticking to the 15 minutes 2 candle rejection right there. So we need to overtake the rejection high right there with the 50 minute as well. If that means the target has already been hit, then so be it, but start building that experience. Because otherwise what tends to happen as well, and this is why this can be tricky if you do not have the experience, is, let's find an example. Australian dollar JPY, I believe, was a good example of this. Let's see what we have. Let's see. Not Australian dollar JPY, sorry. It's Euro JPY. Okay. So if you're diving into these lower time frames, for example, you have this swing high right there, and you start going into, let's say, the 5-minute time frame. Well, the 5-minute time frame right there might tell you, oh, we are already running the rejection high right there, the 2 candle rejection high. But because it's a 4-hour swing high, it's going to take some time. So a 4-hour swing high right there, the 4-hour rejection might take a while right there. So it's going to take longer. So taking into account the different time frames is very important to understand. So my advice would be, for the question that we have right here, first, stick to the same time frame. Slowly start to build experience to drop down time frames as well. 1 to 2 time frames right there. That's very important in my opinion. Let me know if that makes sense, ASR, if you are here. All right. Next question. What do we have here? Let's see. Many good questions coming in. Many good questions. It's a shame. It's a shame. I'm going to try to answer as much as I can. Again, before my... We'll continue until my brain gives out. Until I start stumbling, mumbling over my words. That's when we'll stop. Let's see. Great questions. Okay. Let's see. Gold failed to create 4-hour fair value gaps on the way up after the sweep of the daily low. However, we do see 1-hour fair value gaps being formed. Would you consider this as a weak retracement only to continue lower to the weekly fair value area? Very good question. I love it. Very interesting question because there's so many things that I have not made YouTube videos on about, etc. To discuss in a question like this. It's beautiful. Okay, very good question, Arun. Thank you. Okay, so gold, let's sketch the ID that Arun was talking about right here. Let's see. On the daily time frame, you might be using a CFD. Is that the case? Because I don't have a sweep of the swing low at that moment in time. Let me see. Ah, no, there it is. Sorry, I was thinking of a previous candle low. You meant the swing low, I believe. Let me double check. Yeah, the sweep of the daily low. Sorry. Okay, there it is. So we didn't create 4-hour value gaps to continue higher at that moment in time. Okay, very good question. The first thing I would mention is time frame alignment. So time frame alignment in these cases is also very important to understand. When we have a daily swing low that we are looking to trade from, ideally for myself, I would like to drop into the 1 hour or into the 50-minute time frame. Not necessarily the 4 hour, because the 4 hours only one time frame difference. So what that means is that it might be the scenario when we sweep a daily swing low and you wait for the 4 hour, you get stuck waiting for a long time. You might not even get involved until we start reaching the all-time highs, for example, right there. That's quite important to understand. So 1 hour, 15 minutes would be my preference. Now, the reason why I also like this question a lot is because you mentioned right here, would you consider this as a weak retracement only to continue lower to the weekly fair value area? Really good question. I like that a lot. Okay, so is this a weak retracement right there, or is it just not strong enough to continue higher right there? And could we see a retracement back into the weekly fair value area? So I saw a question. We might dive into it later on. I'm not too sure where it exactly is in the list right there, but it was a question about, you always used to mention, the first thing to figure out is the buys. Okay, perfect. Still mention that. And then the second thing is the narrative. So if we are going higher, what are we going higher from, right? I think a lot of people understand that. If we are going higher, what are we going higher from? This is where we have the first line of defense, the overlapping defense, last line of defense, the fair value gaps, etc., order flow in general. Now, what is interesting is, what if I tell you it's not necessarily about what are we going to continue higher from, it's more so about what is preventing us from continuing higher. So when we start diving into, for example, the pips to payout series, it was really an understanding of those, you might not know it, but it was this ping pong effect that we kept talking about. So every time we retrace back into a fair value gap right there, it was because we were sweeping a swing high, because we were sweeping liquidity or anything like that, that caused the retracement to then continue higher again, if that makes sense. So for example, right here, we see that because we trade back into this fair value gap, it's because we were sweeping this swing high. Because we trade back into this fair value gap right here, it's because we were respecting first this fair value gap right there. Right? That's important to understand. So why am I mentioning that? It's because at those moments in time, it's not necessarily about what are we going to continue higher from. It's about what is preventing us from continuing higher right there. So for example, right here, it's not necessarily about what are we going to continue higher from that swing low. That's nice and all, but it's more so about what is preventing us from continuing higher. For example, the 4-hour value gap. Why is that important? Because the moment we still have something that is preventing us from continuing higher, you'll see price action like this, consolidations. Why? Because there's one force trying to push price lower, there's another force trying to push price higher right there. So when both sides are trying to push lower, trying to push higher, you have 50-50 price action. We are stuck in between PD rays. That's super important to understand. When there's nothing preventing us from continuing higher, then what are we going to do? We're going to continue higher very freely. We're going to move higher very nicely, like we see right here, for example, because at this moment in time, there's nothing preventing us from continuing higher. That's super important to understand. So to link that sort of to the question, to understand my thought process, is would you consider this a weak retracement only to continue lower to the weekly fair value area? No, not necessarily. So right here, this weekly fair value area, to understand this fully, I would like everyone, to the best of their abilities, try to stop fixating on we need retracements, because we don't need retracements in price action in general. We can continue higher in one straight line if price wants to. Of course, there's going to be retracements, but like we see right here with the weekly, with the monthly time frame, what is the one thing that has been happening? Again, when I say guaranteed, maybe take it with a little bit of a grain of salt, but that's the one thing that exactly has been happening. We've been moving higher. We've been moving higher right there. Retracements haven't been guaranteed right there. We have been moving higher right there. So what is important to understand is the moment nothing is preventing us from continuing higher, we are simply moving higher. So these retracements, don't get too fixated on, oh, we should see a retracement back into a fair value gap, because if there's nothing preventing us from continuing higher, then we will already continue higher and we will not create these retracements right here. So oftentimes, and this is from my own experience, right? I need you to understand. Oftentimes, from my own experience, I was too married to a bias. I was too fixated on, oh, but we should first retrace to then continue higher. No. Price can already do this. Price can do that. Price can just, we can have a black swan event and we can already continue higher like this, just as an example, right? But there is no need for this retracement to happen. There's not a textbook that says, oh, we need to create the retracement. No, it's just for us. And that's the same thing. If we are going to continue higher, what are we going to continue higher from? If we do end up creating a retracement, it's likely that we are going to create retracement back into the weekly fair value gap, fair value area, to then continue higher from it. Yes. But as long as there's nothing preventing us from continuing higher, we can already continue higher. I hope that makes sense. Very good question. Again, if that doesn't make sense, feel free to ask it again and again and again. All right. Not a question, but just wanted to let you know your new Ultimate High protocol already took place today in gold, 4-hour time frame. Thank you. Yeah, we just looked at it. Thank you. What I think is important right here is again, like I mentioned already, this Ultimate High protocol happens over and over, happens so many times, and we haven't even dived into the world of stocks, where this happens continuously in the world of stocks, because you're consistently dealing with all-time highs. So that's super interesting. I like it a lot, man. I like it a lot. All right, but thank you for noticing. Let's see, let's see. Okay. 95 questions to go. We're almost there. Almost there, team. It's going to turn into a 24-hour live stream. No. Before that happens, my brain will give out. My brain will explode. It also happens on stocks. Yeah. Yeah, I've been wanting to dive more into that as well, to explore that a little bit more. Super interesting. Hello, Mihai. Hello. Yes, this weekend is full of lectures. Also the MMT, of course. We have a usual breakdown on Saturday. So yeah. All right, let's see. Anonymous. Okay, in stick entry, when we drop down one time frame. In some cases, when I drop down one time frame, I see unmitigated opposing resistances. Okay, since I am trading off a higher time frame PD rate, that resistance is that resistance something to care about or just to ignore and trade off the rejection? Great question. You need to understand there's two types of resistance, and MT members will know about it, but there's two types of resistance. You have order flow resistance and bump in a row resistance. The resistance you likely mention is bump in a row resistance. Sometimes will not be the case, but if we, let's see if we can find an example of this. I think gold is a good example. I think gold is somewhat of a good example. It's not an exact example like you are going to mention it, but for example, right here. Okay. We have this PD ray. Imagine this to be any PD ray, right? It's currently a swing low, but that can also be, it can also be a fair value gap, whatever PD ray you think of. If you go down time frames, and currently we're on the 1 hour just to give you the example, right? Hope that makes sense. But if we go to the 1 hour right here, we see this fair value gap going against us. So what do we do? Do we just enter like this? Or do we, what do we do at that moment in time? When it's order flow resistance like this, so it's direct order flow, like you see right here, the most recent order flow lag right there, you want to wait. You want to wait until it's overtaken right there. To then look for an entry right here. That would be the ideal entry, if that makes sense. But in an example where it's not order flow, so let's see if we can also find an example of that. Well, I think this is a good example right here. This is also fair value gap, right? It's also resistance, opposing resistance. But it's not part of the recent order flow lag anymore because that has already been overtaken, right? So this right here, this fair value gap is known as bump in a row resistance. Why? Because it can still create a rejection on the lower time frame. We could still struggle with it a little bit right there, but it's not likely to push price lower. Order flow resistance, so the earlier resistance we have right there, that's where price action, the bias is not clear enough. So we don't know if it's going to continue lower or continue higher. We might have a suspicion, but we don't have the facts that we're dealing with, right? So right here, what we see is when this resistance, that's not order flow resistance, bump in a row resistance, we can expect a rejection. When you see bump in a row resistance, you can already look to enter, but ideally enter either before it, before we potentially create a rejection, or afterwards. Not during the first time we reach into that resistance area. Why? So I'm going to use the lower time frame as an example, but it applies the same. It all applies the same. I hope that makes sense. The first time we reach back into that resistance, again, what is one thing that can happen? We can create a rejection from it. So when you buy into an area where we can now create a rejection back into your drawdown area, just a little bit of a waste, just a little bit of a shame, in all honesty. You might as well either enter before so you can potentially go break even, or enter after when the rejection is not of a concern anymore and we can already freely move higher, if that makes sense. So that's the only thing that you really want to take into account when we talk about that. Hopefully that makes sense. Yeah, 100% SVY, 100%. Yeah, it's very interesting. All right, let's see. Billy. Hope I pronounced that correctly. I'm sorry if I don't. How to deal with the conflict of opportunities a little bit beyond my risk management. How to deal with the conflict. Okay. The higher the time frame, the higher the probability, but also the higher the stop loss, making me pick less better entries or worse entries. Profit from challenge. Okay. How to deal with the conflict of opportunities a little bit beyond my risk management. The higher the time frame, the higher the probability, but also the higher the stop loss. Okay. Let's see. This is a very good question as well. I hope I understand the question correctly. I think you are referring to the higher the time frame, it also means that you're going to have a bigger stop loss, making it harder to capitalize from things in general, right? I need you to understand that you first want to find the area of opportunity, or whatever your area of opportunity is, just purely on one singular time frame. So for example, at this moment in time, we have an area of opportunity right here to continue higher on gold on the 4-hour time frame. That does not necessarily mean that I now want to enter on the 4-hour time frame. The highest probability, of course, thing you do is you work your way down time frames, which you're doing very well, which is absolutely perfect. But it doesn't mean that you have to execute on those exact time frames. For example, if we go into the lower time frame right here, and if we find an area of opportunity on NASDAQ from daily fair value gap right there to continue higher, etc., towards a new all-time high, then that still can mean, for example, right here, I think this is a good example. This is an area of opportunity right there towards the all-time high. Again, okay, that's the 4-hour. It's a 4-hour area of opportunity. So if I enter like this, I'm also not a big fan of this, because this right here, I would put my stop loss at those lows, targeting 1 to 2. It wouldn't have hit take profit this week, likely. I'm not a big fan of that. I'm not the type of trader. But if we go down into the 1-hour time frame, we can refine this again. So for example, okay, we have this new high right there from this fair value gap, or anything to the left, new area of opportunity right there as well. And now you can go down into the 50-minute time frame, for example, and that way you can refine it. So that way, this larger area of opportunity, you just turn it into one small area, if that makes sense. You just turn it into, I just need to capitalize on this move right here. That's it. So similar to what we went over a little bit earlier, this area of opportunity right there, that's the 50 minutes. I didn't want to capitalize on this on the 50-minute. Why not? Because that turns into a large stop loss right there. It's not going to hit my take profit right there before it might hit my stop loss. So the target has already been hit before I even get involved, if that makes sense. That's very important. So what we see right here is that you can go into the 1-minute time frame right there to then look to get involved. So just going down those time frames to then profit from a small, tiny move to then continue higher within your bigger area of opportunity, just refining it, if that makes sense. That's essentially what it comes down to right there a lot. I hope that makes sense. Okay. Let's see. Okay. If I have a daily fair value gap, then how to take entry from the fair value gap? Okay, 1 hour, 4-hour and 1 hour have resistance areas. How much time do I go down to see the resistance area? You need to determine your entry time frame. So you look for resistance areas in your entry time frame and your context time frame. So for example, if you have a daily fair value gap where you're going to look for entry confirmation, and your entry time frame is on the 1 hour, and the 1 hour, the 4-hour, and the daily is important for your resistance areas. 15-minute, anything below, is not important. But the 1 hour, if you have resistance areas, what we just mentioned, bottom row resistance, it's important. If you have the 4-hour, it's also important because it's above the 1 hour time frame. If it's a daily, that's arguably even more important. So that's very important to understand. If it's, for example, daily fair value gap for your entry, where you're going to look for your entry confirmation happens on the 15-minute, then you want to look at the 50-minute, 1 hour, the 4-hour, and the daily again, if that makes sense. All right, let's see. When looking at token rejection failing on a PD rate to target the next PD rate, say I'm looking at token rejection on one time frame below the PD rate. I'm looking to see it being disrespected. Do I need to see a fair value gap running the rejection or just a candle close beyond? No, it's not about fair value gap. So I need you to understand something. When we talk about running or sweeping certain highs, the full story is that institutional story. So it's about being comfortable or not above a high. It's about a liquidity story that happens on the back end, you could argue. But in order for us to see it more easily, or for example, a more beginner-friendly way of me mentioning, hey, we are running the rejection high right there, you can say, hey, it's a fair value gap. But this is where it's all fractal. So for example, if we want to understand if we are running this high right here, or even this high right here, I can understand it 2 time frames below through a fair value gap, which makes it a little bit easier to understand. But I can also say, because the fair value gap, what is that on the higher time frame? That's just one singular candle right there. One singular candle right there, which is just candle signs, if that makes sense. So that's a little bit of a personal preference, how you want to approach it right there. What I personally like to do is stick to similar time frames, 1 or 2 time frames below, and look at what we are actually doing right here. So I like to see rejection high, we are rejecting from it. That's a good sign. And then we sting back above it again. So those two stings. We have one sting right there, and then a second sting. That to me is a sign that we are comfortable above the high, that we are potentially running it. If that makes sense. Was a good question. All right. Let's see what we have. Hello, Mayan. Hello. You simplify trading for me by saying this market either rebalances itself or seeks liquidity, but as an intraday trader, I feel confused about which time frames I should use. By the way, love from India. Thank you very much. Thank you. Okay, good question. What I think is important to understand is that if you are an intraday trader, I'm going to assume that a lot of your activity happens on the 15-minute time frame. So for example, what we see right there. Now, that doesn't mean, so as any trader, right? If you're a scalper, if you're an intraday trader, that doesn't mean that you're just going into the 15-minute time frame and you're just going to stare at it until hoping that something shows up. No, this ID right here it happened on the 15-minute time frame. But we first look at the 4-hour, what's happening. We first look at the daily, what's happening right there. We understand all these time frames, and because we understand all the time frames above the 50 minutes, we can now go into the 50 minutes and really understand, okay, this is ready for something to present itself, if that makes sense. That's very important to understand. So you need to have also the monthly, the weekly, the daily, the 4-hour, and the 1-hour in context with each other. Now, of course, when I say you need to have the monthly in context, that doesn't mean that you need a whole chart, a whole screen on the side thinking, oh, I need to constantly check the monthly time frame. No, well, the monthly time frame is not going to do a whole lot. It has a month to form. So even if you check it once a month, you're going to be fine. But if you now go down into the weekly time frame, okay, maybe check it once a week right there. Okay, check it on the daily time frame, check it once a day right there. Okay, the 4-hour, you might want to check it more often. This is where it gets tricky into the lower time frames, because now you need to take into account all those different time frames as well. That's very important to understand. So you can dive into the 15-minute time frame as an intraday trader, but start off by understanding the higher time frame story. What are we doing? What are we looking at? I'm going to give you another example. For an intraday trader, Australian dollar US dollar has been very interesting to trade in between PD rays. So for example, we see this swing high right there. Okay, initially what we see is that we have this rejection, two candle rejection, this is a rejection high, right? So if we are still respecting the swing high, which means that we can potentially still continue lower, we will expect next candle can continue lower like that. This is why it's so important to understand. It's not necessarily about what are we going to continue higher from, it's about what is preventing us from continuing higher. Then you're always one step ahead. So what we see right here, if we start running this rejection high, we have now an area of opportunity to continue higher towards the next target right there, the next PD ray. Okay, so if we start running that rejection high right there, and you understand this on the higher time frame, right? You start building the story, you start building that picture. Then right here on the 4-hour, on the 1-hour, it becomes a lot easier to now use these 1-hour for Vegas, for example, to get involved right there, or go into the 15-minute time frame to now look to get involved, if that makes sense. That's very important to understand. And if that main story is not there, then likely there's also no opportunity. So one of the biggest mistakes that you can make is try building this story on the 50-minute and then constantly seeing if there's some opportunity, because then you're just forcing it, if that makes sense. That likely means you're just focusing on low probability opportunities. All right. Thank you. I'm also excited. Thank you. Hello, Ariel. Feeling excited to have you back. Thank you. So I've watched your A to Z guide, the I think Market Mastery or MMC playlist, and have been practicing it. I've reached 3 accounts and currently on 4th, which is in 4% drawdown. I think I'm not able to make my own edge. What I think is very important to understand, in all those times that you breach an account, there's so many lessons. And this is where, for example, it's very difficult to actually understand what's going on in your trading, because I don't have your journal in front of me, for example. In MMT, we go over someone's journal, for example, if we have the opportunity, if we have the time to do it. And we can actually see what is the exact problem. What have you been doing wrong, if that makes sense? So unfortunately, this is a task that I'm going to hand to you as well, but I'm going to push you in the right direction. So what you want to do is, you have breached 3 accounts. There's no shame in that. There's a lot of gold. There's a lot of valuable information in those breached accounts right there, because there's a lot of data to work with, a lot of trades that you've already taken that have either been working out or haven't been working out, etc. There's a lot of data to work with. When we start dissecting that data and we see, okay, this pattern has been working, This pattern hasn't been working. We want to focus more on this pattern. Okay, this risk management hasn't been working. This risk management has been working. And that's very important to understand. And then from there, you can slowly start improving. I can't stress this enough. Anyone, everyone, I need you to understand it very clearly, because I see these comments, well, not necessarily often, but I see these comments more times as well. So I've seen them more times. If you've been trading for some time, you've already blown a few accounts, etc., and now you're moving on. You're just moving on by doing the same thing. That's essentially the what is it? The definition of insanity. It's doing the same thing over and over and over and expecting things to change. I need you to understand. It's not as magical as you are going to take these concepts and you're going to apply them. And if you keep doing the same thing over and over and over, you're just going to be profitable all of a sudden. No. It's very interesting, actually. When you think of a football team or anything, there's a beautiful example currently. A football team who has a very stubborn manager, or basketball team, who just does the same thing over and over. And the tactics are clearly not working. So what does a good manager do? You start to adjust. You start to adjust and see, hey, what has been working? What hasn't been working? How can we adjust to make sure that we do have that edge, right? You're constantly evolving. And this happens very naturally if you are journaling, etc. If you are just sitting there stubbornly and you think, oh, well, I'm just going to keep doing the same thing, and well, maybe one time it will click. Manchester United, yeah. It won't happen. It won't all of a sudden happen. That's super important to understand. You need to constantly evolve, one step ahead of the market. And that happens super naturally if you journal, if you see what has been happening. But if you have 3 breached accounts right there, to me that shows you have been doing the same thing over and over and over. So the 4th one right there, you'll likely do the same thing unless you learned from the previous 3 accounts. That's very important to understand, right? That's very important. So 4% drawdown as well, I would mention that's quite heavy. If you're not profitable yet, or you haven't seen the daylight of profitability, tone down the risk. Tone down the risk, 0 to 25%, and just keep executing and see if you can gather data to learn about it. That's important to understand. But don't up the risk right there. Tone it down completely. Let me know if that makes sense. Oh, let me get some water. Perfect, Alexander. Perfect. Let's see. That's a good question, actually, this recent one. How do you review your data? How do you study it? A video about this would be gem. Yeah, I do agree. Yeah, that would be a good video. There is a video, actually. There is an older video about that. There's an older video about that when I think about it. A trading plan video. I'm not sure why your trading plan isn't working or something like that. Something along those lines. I'm not sure what it exactly is. It's where I dive into Derek's data, actually. Very interesting. And we see what's wrong, what can we improve, etc., etc. Usually, to sum it up, by the way, I need to mention it. The way you would go about data is the first thing you would do, you would have a clear overview. So see, is there a clear pattern on the things you trade? For example, the pairs you trade, the instruments you trade, the times you trade. Is there something there? If there's not something there, a clear pattern, okay, we start diving into the individual trades. See what is the overall pattern that has been working, that hasn't been working, etc., etc. All right. Let's see, what do we have here? Sir, I need to clear my entry in ST plus RE. How to find RE in break that high or body. An ST plus RE is quite straightforward, in all honesty. An ST plus RE, if you have a PD ray right here, let's see if we can use this as an example. Fair value gap. Go into the 1 minute time frame. Ooh, let's not go into the 1 minute time frame. There's a lot of gaps there. Okay. The ST is essentially the first fair value gaps that you get out of the PD ray, which in this case is there, right there. The RE happens once we trade back into PD ray, right there, and we continue higher again with a new fair value gap. So it's essentially 2 order flow legs. That's about it. That's the ST plus RE. Now, what is important to understand is that sometimes you will get a very ugly ST plus RE. What is an ugly ST plus RE? For example, if we have a very large ST like this with no retracements, usually it's not great. You want to wait. Then once we have a deep retracement right there and we get a RE like this, This is not ideal. Why is that? Because the momentum is not in our favor. We have a large ST, we have a lot of momentum, and the RE is very small with almost no momentum. So here, we ideally want to wait until we do gain that momentum again. Usually, the rejection happens from resistance as well, if we want to continue higher again. If that makes sense. Let's see. Ortho lags. When there is an imbalance in price and it keeps going further, upon retrace, imagine price creates another gap. An inverse gap, if you will. Okay, would this mean most likely the price has changed bias if there are other gaps present also in the order flow? Not necessarily. No, not necessarily. In order for price action to actually change bias, what oftentimes needs to happen, we need to have some signs that actually price action is holding. So, for example, this also comes down a lot to manipulation gaps. Manipulation gaps happen a lot. So what is very important to understand is when you, for example, see fair value gaps like this to continue lower, if the higher time frame bias initially was still bullish, oftentimes this is just manipulation to then still continue higher. That's the suspicion we have. We cannot act on suspicion. We only act on facts. And when we act on facts, we want to have the fact that we retrace back into it right there to then hold it, continue lower, and create a new ortho lag. When that happens on the higher time frame, then we can consistently say, okay, we are switching bias slowly. If that makes sense. Let me see if I think there are a few questions as well in here that are a little bit more new, what we see right here, that I think are crucial for you to understand as well. Let's see. I saw one question, by the way, which I also wanted to address. I think it's somewhere here. It's here, right there. Could you share how the mentorship is structured? The MMT are the new videos or mainly 2023 content? When we talk about 2003 content, it's very old. So for example, you'll see people, sometimes people on social media, they share my old content. That's not updated or in general that relevant anymore. So for example, we have many new modules at this moment in time. Clarity module, training plan module, etc. That's also how it's newly structured. So zero to hero module, etc. Clarity module, training plan module, high probability module, all these new modules, you won't find them anywhere else besides the MMT, if that makes sense. That's quite important to understand. Let me see. I saw a few questions right here. Let me see. Let me pick out one. Let's see. Okay. If the first ST fails, but after that we get a ST plus RE, do we see this as an ST plus RE or just an ST plus RE because the first ST did not hold? It's a good question. What I think is important to understand at that moment in time is if the first ST fails, usually it's a sign that we might be consolidating as well. So ideally afterwards, whatever happens, you want to have more confirmation, if that makes sense. You want to have more confirmation if we still want to continue higher. That's very important to understand. That's very important. Let's see. Good question as well. Let's see. Hello, SVY. You're asking good questions. How do you deal with not sitting too much on the charts? Like I always have to manage every ST plus re-entry as a filter process trader. And it's kind of hard to always put new alerts and new timers. God bless. Thank you. Likewise. What I think is important to understand right there is for the entry, if you do need to be there a little bit more active, don't worry too much about it. So if you're, for example, looking at a 1 minute, 5 minute ST plus re, you're waiting for that, don't worry too much about it. That's all right. So you can look at the chart right there. As long as afterwards, so there's large parts in between, you're not just staring at the chart over and over and over, if that makes sense. That's very important. That's very important. FVG doesn't work every time. It's not supposed to work every time. Nothing works every time. Welcome to trading, my friend. How to know if price is losing momentum or where to track your trade? I actually see this question in the chat as well. It's a good question. How do we know if price is losing momentum well, momentum is quite a funny thing because price tells you how momentum works. Price tells you if there is not enough momentum, etc., etc. So, for example, what is good momentum? Well, momentum is fair value gaps. What are fair value gaps? Fair value gaps is momentum towards one side of the market. So right here we see fair value gaps being created. It's a good sign. Right there we have clear momentum. We are respecting these fair value gaps to continue higher. It's a good sign. We have momentum. If we start going to the lower time frame, you'll see, for example, right here, the recent price action right there. Here, if we now start zooming in a little bit, we'll see we struggle. We're struggling a lot more to continue higher. We do not create fair value gaps. We create these large retracements right there. We have these consolidations. When that happens, usually it's a sign that momentum, we're losing momentum at that moment in time. All right, team. My brain is is already quite fried at this moment in time. Sunday, so every Friday and every Sunday, we are going to do a live session as well. It's currently the end of the week. So I'm going to enjoy the rest of my Friday as well. Enjoy my Friday evening. Every Sunday and Friday again, 2 p.m. New York local time. New York local time. You can also ask these questions. I'll drop a new link as well. So if you want to repeat the question, that's perfectly fine. If you want to like the question, so it's more likely to be answered, that's also perfectly fine. I'm sorry for not going over all the questions at this moment in time. It's 93 questions. Maybe we can do a large session where we will go over a bit more questions as well. All right, thank you everyone. Thank you everyone for being here. Again, Sunday, 2 p.m. New York local time, we are back. That's when we'll not focus on the recap. We'll focus on the forecast, so looking ahead, see what we can expect of the market as well. And we'll go over questions. We'll talk in the chat as well, see what's going on. And feel free to ask me anything. Let me see. Thumper, very new here. Example, is the intermediate to highs, there's a lower 4-hour time frame, and the short term is the 50-minute. Correct. Yeah, essentially it becomes fractal. Yeah, that is correct. Thank you, everyone. Thank you, thank you, thank you. Thank you for being active. Thank you for the good questions. I can't give good answers if there's not good questions, of course. Thank you, everyone. Take care. Have a great rest of your weekend as well, or the beginning of your weekend. See you on Sunday. All right. Thank you, everyone. Take care.